Today we're going to talk about a stock called AvidXchange, and this is a firm I think that's largely been flying under the radar of investors. And we first wrote about them almost a year ago to the date, and today we want to revisit the firm and check in with how they've been doing. So I'll put a link to that original research piece in the description of this video, along with our updated research piece that went out yesterday. But we're going to start this conversation talking about paper checks. So these were first used on the Silk Road, and surprisingly, debit cards, which more or less replaced checks, didn't surpass checks in popularity until 2003. And the following year, they passed an act that made it legal to deposit checks remotely by snapping a photo with your smartphone. I only recently realized that you could do that. Shows you how many checks I receive, and it's quite useful. That particular act was passed to protect the economy in case of a disaster and people wouldn't be able to travel. And of course, that actually happened. Interesting little side note, a lot of famous people like to pay by check because the people that they pay won't cash the check. They'd rather keep that individual's signature. So the company we're going to talk about today replaces paper checks in the context of how businesses pay one another. So here's a before and after for the AvidXchange value proposition, and this is quite interesting. So the cost to process a paper invoice and a paper check, that total cost for a business is about $19. That's how a lot of business, I think up to 42% of business to business payments in the United States still take place in this fashion. You send somebody a paper invoice and they send you a paper check. Well, if we implement some automation into the process, then the cost drops dramatically. It's about $12 in savings per transaction. So that's the value proposition of AvidX. And they're targeting middle market. And here you can see this nice little diagram they've put together showing how they position themselves against large enterprise providers of a similar offering a similar sort of platform, and then a smaller platform for bill.com. On the enterprise side, you see a firm called Coupa. And AvidXchange doesn't believe they have a lot of competition in the middle market segment. Certainly what's out there is quite fragmented, and they believe that they're still largely competing against legacy paper payments. And the value proposition that AvidXchange proposes to firms can add up quite quickly. So they say that the companies they're targeting process about 200 invoices or more than 100 payments per month. So at 100 payments per month, if we assume that $19 cost mentioned earlier, the net present value of AvidXchange's solution based on the savings would be about $684,000. So that's a perpetuity calculation using a 5% discount rate and 3% growth rate. So more or less it says that if you're a CFO looking at bringing on this solution, you can assume that it's going to save your company a meaningful amount of money. So that value proposition will sell itself during good times and bad. And indeed it is. So here you can see their quarterly revenues. And there's a small blip there in Q2 2020 where the Rona wreaked a little bit of havoc. But aside from that, this is nice, steady quarterly revenue growth. Those last four bars you see in green, that's the growth since the last time we looked at AvidXchange. So as we're checking in with this stock, we can say that revenue growth certainly hasn't stalled. And their latest guidance in the last two quarterly earnings reports, they actually raised guidance 2 times in a row. And the latest guidance number would represent a 24% growth on the lower end, which exceeds their long-term target of achieving 20% growth per year. And what's interesting is when they bring on a new customer, again, you can go to that old article that we did last year on explaining their business model in more detail. But when they have a new buyer customer, 95% of the time that somebody was moving from paper payments to electronic payments for the very first time. So when they come on board, obviously everything is still done the old way, and it takes time to transition them onto the uh, digitalization of payments. And right now, based on all the buyers AvidXchange has on their platform, they estimate that's about 55%, let's say 45% complete across the board. So 55% of the payments volume is still paper checks. So you can think of that in the context of uh, net renewal rate in the SaaS world in terms of the increasing expenditures on their platform from existing customers. And when we look at who they're targeting, there's 8 industry verticals they focus on. And the company actually cites this as a competitive advantage, the fact that they've built these verticals to cater to specific industries. So you have real estate, construction, financial services, healthcare, education, and media, which was most recently shored up by their acquisition last year of a company called FastPay. It's quite interesting. They talk about how the US midterm and presidential election cycles have a significantly favorable impact on revenues in media, which is a testament to the deep intertwinement of US politics and media. But be that as it may, the top performing verticals right now for AvidXchange: real estate and construction. In regards to real estate, they talk about how there's actually diversity within a particular segment. So while commercial real estate isn't doing so good for them, other areas of real estate are, such as multifamily homes. And when it comes to construction, the demand for construction may be subsiding. That would be top line growth, but that's actually driving construction companies to look for ways that they can do things more efficiently, bottom line growth. So again, going back to that idea of this platform selling itself in good times and bad. Now, when we look at runway and gross margin, something we didn't focus on last year, clearly because we weren't in a bear market, but they're spending about $50 million in cash on their operations so far this year. That implies a $100 million burn rate per year. They have $363 million in cash on hand, so that gives them a runway of about 3.5 years. And they're expecting to reach profitability in 2024, not that far away. So they should be able to manage through with the cash they have on hand without having to raise more capital in a really crappy environment. Their gross margin is also expected to expand to around 70%, somewhere around 63% today. So these are two metrics we like to look at in the context of survivability. Now, there are some risks we're concerned about. Their exposure to the United States: 100% of their revenues come from the US. When they talk about the international opportunity, they specifically say that there's with their existing client base, no opportunity to capture cross-border payments. That's probably because they're working with medium-sized businesses. Now, one thing that's quite assuring is this persistent growth that we see. There isn't a sense of urgency for them to expand internationally because they have this $20 billion total addressable market to capture in the US. And the other concern here regarding concentration is they talk about how interchange fees that they're processing up until this year were primarily through a single provider. We suspect that's MasterCard. They helped fund AvidXchange. When they talk about partnerships, they're always putting MasterCard first and talking about exclusivity. So they make this second statement: to mitigate this risk, they began processing a substantial portion of their transactions through a second provider. Who would that be? Does anybody have any idea? Because it wasn't quite obvious which firm they're talking about there, but those two providers together, whoever they might be, represented 59% of total revenues for the first 6 months of this year. So there's a bit of concentration risk there. Now, when we look at valuation, we've put up some other fintech stocks here. The average is about 5, and that's where AvidXchange sits. So the shares have dropped significantly since their IPO that was held last year, about a year ago. And I think the IPO came in at $25 a share. They're trading somewhere around $9 a share now. So heavily discounted. Now, just to conclude, AvidXchange seems to be flying under the radar as investors focus more on the B2C payments niche. This is a firm that saves other companies money at a time when costs are being subjected to greater levels of scrutiny. So certainly will sell itself. If we had more capital to allocate to this position, AvidXchange is currently one of the 36 tech stocks that we're holding. We would add more shares at these levels. Now, we would probably wait until next week when they have their earnings call, and that's because this company has had the following, or say the last two earnings calls were quite favorable. They raised guidance in each one, so the likelihood of something not meeting the lofty expectations of investors seems high. So we always like to wait until after earnings before we add shares. But at any rate, please drop your comments in the comment section. Make sure to subscribe to our channel, and thanks for taking the time to watch this video today.